if you're not scared by Monzo taking your customers or Tandem taking your customers or whoever, then actually this is going to get bigger and this problem is going to get more scary.
If you're not scared, where have you been? So first up today, we have a story was reported in FinExtra that digital banks are on track to treble customers next year, but profits remain elusive. We've not heard that before. UK digital banks such as Revolut, Starling, Tandem, Monzo and N26 are set to experience massive growth over the next year, amassing 35 million customers around the world. Digital banks that operate in the UK now claim 13 million customers in Europe, and 5 million new accounts opened in the first 6 months of 2019. Accenture predicts this customer growth is set to increase over the next year as digital banks win customers both in the UK and in new markets such as the US. I feel like I have to throw this straight to Rona.
Hi.
Any thoughts?
Well, hopefully this isn't too mean, but I read it and my first question was, what is news about this?
Thank you very much. I can't find the actual report, and as a researcher, it really annoys me that I cannot find anything to back any of these statements up.
Big consultancy, states bleeding obvious. It's an interesting one, right?
Was wondering the same thing. What is the research? Who are all the fintechs and all the banks? That wasn't clear. And are we growing? Yes. Are we all profitable? Not yet, but we all knew that before. So
I think what this will be is if you kind of think about who the customer base that they will be aiming this at, it will be big banks be scared. Essentially what this is if you're not scared by Monzo taking your customers or Tandem taking your customers or whoever, then actually this is going to get bigger and this problem is going to get more scary.
If you're not scared, where have you been?
Well, but even still, I think a lot of the organizations think, not just that there's customers being created, but actually that it's not hampering their profitability yet. So it's that old thing that we've sort of said before. It's where they'll never get licenses. Oh, they've got licenses. They'll never acquire customers. Oh, God, they've got customers. They'll never go international. Oh, God, they've gone international. And now it's like they'll never make money.
And they don't take as many deposits as the incumbents, right?
Yeah. So I think, lots of good numbers coming out around, Monzo's customer numbers or Revolut's numbers or whatever. And I think it's now that this type of thing will make, if you're the CEO of a big bank, you'll read this and go, crap, we probably have to do something, which is probably why Accenture wrote it in the first place.
But to Sarah's point, they probably should have known by now.
Yeah, probably.
You're right. I mean, the number, 35 million, when I first saw that, I thought, is that just in the UK? That would have been surprising. But
out of, 36 million? That would be impressive.
Impressive market share goals there. But no, I kind of agree. This is something that I guess if you've been in the industry, certainly as a VC, you knew what you were getting into with these neobanks, and it's just really a question of long gaming. Tom and every neobank CEO has always been completely clear about that. The thing that I find is going to be really interesting to see how this pans out is the traditional bank model was very much give customers free banking and then earn the revenue back by selling them other products, sometimes transparently, sometimes intransparently. So the thing that we definitely still need to find out, I think, is how does that model work when every single fee is totally transparent and when banks aren't able to screw customers on FX, says the guy from TransferWise. Quelle surprise.
You would say that.
But, yeah, exactly. But
this is not a marketing advert for TransferWise.
I promise that was the last one. But the point is that the model still needs to sort of find its new equilibrium, I guess, with customers being way more aware of what they're actually paying, and the banks, not having to pay for the old physical branches and all that stuff, which was obviously a huge cost base. So perhaps actually they can be more transparent and charge less if it's a digital only.
I think we're mid the second movie. We're Empire Strikes Back right now, right? To your point, everybody gets this now. And actually RBS, you're investing in Bow, in Metal, in sort of many other sort of challenges. And it's not just you guys, but many other organizations are creating startups to almost take advantage of everything that a startup can do, but with the investment potential and the big brand that kind of comes with it. So, I mean, the dynamic, I think, is really interesting. The next few years are going to be fascinating.
There's some. What I really want to know, though, is these numbers that they've published, right? Digital challenges have substantially lower cost. Of course I do. Yeah. I'm an analyst. I'm a researcher. If you're going to publish a number, you need to tell me what it is and how you got there. Rona's completely nodding and agreeing with me. So this kind of The 20 to 50 pounds is the lower. The digital challenges have a substantially lower cost to serve than incumbents of 20 to 50 pounds, and lower in some cases per account compared to 170 pounds. Deposit balances for challengers have increased from 70 to 350 pounds per customer. However, 9,000 is still the average for incumbents. Those numbers mean nothing without context, and it just drives me mad. And I don't feel like this is, unless you're in a big bank and you know your own numbers, this is not helpful to anybody else.
9,000 over what period of time? A lifetime of a customer? We don't have the same lifetime as RBS or Barclays or anyone else, right? So what are we comparing?
So I think the deposits one is hard to compare apples and apples. I think the cost to serve, the cost of a current account is such a specific thing. So when I was back at the bank, but actually when I was at Gartner, this is something people would obsess over.
Oh, they do absolutely obsess over it.
And it was always somewhere between about 180 and 230 pounds, depending on which organisation you were working with. And actually, I know Tom's sort of come out and said somewhere between £5 and £10 now to run a current account, which is pretty impressive. And this is, again, when it comes to the things that will make the CEO of a big bank be scared, it's that. Because the thing that scares them is not their CapEx budget being spent on innovation stuff. It's the OpEx in the back office that's costing you. Like there's one organization we went and visited recently. It was $9 billion to run their operation that it cost them each year. That's the thing that keeps CEOs up at night. I think not the freezing a card or like that stuff is interesting and they believe that they can copy that stuff. It's the fact that their operation costs infinity more than it does a challenger bank.
The other thing with the front loading of so much of that cost when you're in high growth mode, the cost of literally is down to shipping the card and down to making sure that the customer support service is so good that you as a customer believe, yes, this is the future of banking. It's very expensive and it's all front loaded. So then it comes down to how willing are your VCs essentially to play the long game on this. And there have been, I don't know whether you guys remember Bank Simple in the US, who essentially...
We all know about Bank Simple.
No, it was an unfortunate timing in that, that long game investor wasn't forthcoming at the point when they needed it and ended up being sold to a traditional bank, BBVA. So I'm hoping that doesn't happen again.
Agree.
Well, from banks that already exist to perhaps some new banks.